Rajesh and Mr. Bagga with us. Mr. Bagga, also give us a sense on now run up to the budget. Since we've seen the budget's specific sectors have moved quite much. Talking about infrastructure, defense, these spaces have moved a lot also past week also. But then there was an interesting note by Jeffries which came in last week, and they've spoken clearly about that it will be a positive for government will be able to balance between the fiscal and the capex and growth, since they have a they have a sizable amount of dividend which they got in from government, and of course the tax buoyancy. What do you say, what do you have to make out of this space right now? Will these spaces continue to perform well? What should be the expectation in run up to the budget from here?
Priyanka, the only thing on this, and we had discussed this earlier also, railways and defense stocks, is the valuation. And I have been proved spectacularly wrong on this because they have kept going up even after being 50 times, 80 times price to earnings. Just the sheer momentum of the money coming in. If you see, there were block deals of 400, 800 crores yesterday in some of the defense stocks. So there are people who are allocating money at 58 times, 87 times price to earnings. Doesn't make fundamental sense. It's more the promise and all the next 3 years, 5 years execution has got baked into these stocks. So I think we get a melt up continuing in these stocks going into the budget. And then maybe post the budget, we see some softening. But overall, the issue is these are very good companies, well-run companies, huge order books, executing well, multiple year runways. Only issue is the valuation. So from a valuation perspective, we have reduced our exposure to defense and railways, even though they are growth stocks. I think we are looking elsewhere right now. Power, for one, is looking quite good. Again, you mentioned some of the brokerage reports on power. I think utilities, financials, they offer much more compelling investment thesis. Defense railways, you have to participate because it's very central to the India story. A lot of import substitution will happen, and then export growth will happen as well. We saw one of the foreign companies building locomotives in India, sending the Australian metro entire train is being built in India and sent abroad. Those things will start coming in also, but we have factored in a lot of it. If the valuations were better, it would be a no-brainer. The valuations make me a little cautious on the railway and defense.
If you like this video, then like, share and subscribe to ET Now.